If your procurement team bought a $50,000 injection mold, shipped it to your factory in China for free, and then you only paid import duty on the finished plastic parts, you are currently sitting on a massive, unexploded compliance bomb. Welcome back. Today, we are talking about the most frequently audited and penalized area of customs valuation, the assist. Most importers think that the value they declare to customs is simply the price printed on the commercial invoice from the factory. If the factory charges you $5 per unit, you declare $5. Simple, right? Wrong. The World Trade Organization's valuation agreement requires you to declare the true transaction value. And if you provided the factory with anything for free or at a reduced cost to help them make that product, the value of that item must legally be added to your import declaration. This is called an assist. Let's look at the 4 classic types of customs assists. Number 1, materials and components. If you buy specialized microchips in the US and ship them to Mexico for free so the factory can put them into your radios, the value of those chips is an assist. Number 2, tools, dies, and molds. This is the biggest trap. If you pay a German engineering firm to build a heavy steel mold, and you send that mold to your supplier in Vietnam to stamp out your car parts, the entire cost of that mold must be declared. Number 3, consumed materials. Things that are used up during the manufacturing process, like specialized cutting oil or testing equipment that you provided to the factory. And number 4, engineering, development, artwork, and design work. If you hire a freelance designer in Italy to create the blueprints for your new product, and then you send those blueprints to China for manufacturing, the cost of that Italian designer is a taxable assist. Here is why this destroys companies during a customs audit. Your shipping department has no idea that the procurement team bought a mold 6 months ago. The shipping clerk just looks at the commercial invoice for the finished parts, sees $5, and files the customs entry. Customs clears it. 3 years later, a customs auditor comes to your office. They do not just look at your shipping documents. They look at your company's general ledger. They look at your R&AMP, D expenses. They look at your fixed asset register. They will find that $50,000 mold. They will ask, where was this used? You will say, in China. Then they will pull your import records and ask, show me where you paid the 10% import duty on this $50,000 asset when the finished goods crossed our border. When you cannot produce that proof, they will hit you with retroactive duties, massive interest, and severe penalties for negligent valuation fraud. So, how do you fix this before the auditors arrive? You have to bridge the communication gap between your engineering, procurement, and customs compliance teams. You must track every single piece of free issue material or tooling sent overseas. Then, you have to apportion that value. If the mold cost $50,000 and it will produce 50,000 units, you must legally add $1 to the customs value of every single unit you import. If the invoice says $5, you declare $6 to customs. Alternatively, you can declare the entire $50,000 assist on the very first shipment, pay the tax up front, and then declare the normal $5 for all future shipments. Do not let your company's hidden engineering costs become a customs penalty. Audit your fixed assets today. Are you currently providing tools or raw materials to your overseas suppliers? Drop a comment below, and let's discuss the safest way to declare your assists. Thanks for watching. Keep your valuations accurate, and see you in the next video.